Hello, hello, hello. Right, let's
Welcome to Stratton Oakmont.
thank you very much. Okay, look at the news then. Year-on-year CPI come out 0.2 lower, that's good. 0.1 lower. Services 0.1 lower. PPI come out 0.2 higher. PPI come out 0.8 lower. Output prices, so the actual cost has gone up, which makes sense because it's inflation, and the consumer spending has gone down, which makes sense. Yeah, makes a lot of sense. And President Takaichi is talking right now, so there's going to be some volatility there for sure. Right then.
Russia and China sign a pact on further deepening of partnership.
So what day you want today? Wednesday, yeah? There should be this live stream. So UJ is coming down. Obviously GJ is flying up after that CPI news come out. I'm guessing that the story for rate cuts, you should actually weaken the currency, so why is it going? Why is it going that way then? Doesn't make sense. Yeah, Wednesday's dead day. CPI and FOMC in the evening. That's fine. That's fine. Right then, let's go to lower time frames and see what's gonna happen then. See how things are looking even. Now we've already gone up and took all this out. So either we go up here or we drop down. Simple. On GJ. What? Why is it there? UJ might go down. Bloody hell, it took the high. Only by 0.5, but still it took the high. Okay. So from the low to the high, we've already had a 33 pip move. Well, where is volume? Are we gonna have any volume left after that? Like, sheesh. I like the look of this to go short, as long as
Traders cut wages on Bank of England rate hikes and price at 54 basis points through 2026.
I'd like to think of this as a channel. That price is then gonna come, take and push down, hopefully.
UK rate futures point to around 52 basis points of Bank of England policy tightening by December versus about 60 on Tuesday.
They're gonna tighten everything, mate. Even the even the underpants if they can. Oh, you could say this is a build up and a sweep as well, but I don't like the way it's coming down and then it failed to really break the highs. More like equal highs, wasn't it? Yeah. I'll keep that there just in case then. And then I'll mark that down as well, because channel there. I think it's going to continue to go down in all honesty. The issue I have with GU is it's taking the low and the high, so I'm a bit yeah. And it's hard to figure out the structure that we're in as well. Suppose you can have a look at the 4 hour, see if there's anything. Actually, the daily start from there. Build up there. Sweeped it, dropped all the way down, took these two lows here, pushed up, filled the imbalance there. Slowly dripping down. I think we might go higher. And it's extending these outwards in case you don't get any move anywhere and we just get stuck unstalled price action. That's 70 pips. I'm not seeing that today, in all honesty. I'm really not. And this is even more than 70 pips. That's 890. Oh god, there's even more. It's that weekly low. Oh, flipping hell. This is going all the way over, mate. Go to 30-minute time frame. Two, three. I'm gonna put that to Tuesday. And then gold and silver. I think once silver's taken these highs, you might get a chance to go short on silver, so I'm gonna put that there. Then same with gold on here. Interesting, we're going higher. I'm gonna bounce off of this midline level here and then start to do the reversal. The channel push up, bounce off the midline, then drop down. But nothing here yet for DJ. So we keep going higher on UJ, which is interesting. EUGU had a lovely fall off, but I don't like the where it's kind of fell off too. I'm suspicious of how that looks, honestly. And that looks cleaner. The 15 pip move and then the minute before. A 22 pip move on the news. Interesting. Right, silver's moving. Let's see if it gives a reversal. If it does, we'll go short silver. This might be hard to do if it breaks this high, it's a problem. If it doesn't, it's okay. Our channel there, you got a bunch of highs there. Price just wicks up, takes these highs out and under this channel, and then hopefully bounces off down here to the downside. I'll be happy to go short at that point. If we get confirmation, of course. Still in this sort of demand zone area, not risking it. Oh damn it, my cycle's reset now and it's after another 2 weeks for a payout. Yeah, damn it. Then now that's gonna be the 2nd of June. Yeah, fine, it is what it is. Cloud mist, yup. I couldn't have taken it till after there at least, so that's a no for me. Looks to me like it's gonna go long. I'm gonna come up for this area here.
Putin says we are ready to continue supplying China with energy.
Makes sense. Traders cut wager on BB rate hikes pricings to UK rate futures 0.2950 minutes currency tightening by December Tuesday. China energy. Okay. Now we're at Asia low there on EU, and we're getting a bounce. I want to see it jump up, take this channel out, then give a clean break to the low side to go short. But then UJ is concerning because oh my god. $27, $28, $30, $31, $30. Wow, next week is gonna be absolutely hot. Wow. First time we're hitting 30s in the year. Woo! I think we only got to about 2022 before. No, 24. Awesome weather, man. Awesome weather for walking and stuff. Anyway, I prefer it to go higher, damn it. Drop down further. I would prefer it drop down further. Now we're at 8 o'clock. Minute before took these highs. Just about took that high.
Isn't that one big, huge, brilliant deal? Come on, people.
Yep, I'd prefer it push up. Oh no, because you got these three candles here, so it could even break structure and then go long. through that channel. It's not swept anything, so I can't even. Yeah, I don't even make. Yeah. $30 million verified trader versus 15 unprofitable traders. Yeah, I can challenge all of them. Bloody hell, losers. Oh dear. Na, 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 na. Na, 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 na. Na. GUNA are the strongest. Huh? How is GBP on there twice? GBP is green, so it's not the strongest, and is I think you meant euro. What? Strongest GBP, USD, NZD, AUD, Euro, GBP, CAD, CHF. What? Does he mean JPY? There's no JPY there on the chart. Ah yeah, JPY, then USD, then NZD, then AUD, then Euro, then yeah. Oh dear. This currency strength chart is cooked. Anyway. Now we're gonna take this side to go down. This level here, or is it something different going on here? Upper silver. I guess I should have seen it as invalid zone, maybe. And then all that moved down without having any price to come sweep it. And then maybe long from there, not sure. Silver's been pretty much consistently going up throughout Asia, so let's see what happens here now. Is it going to start to shift and give us an entry, or is it going to keep doing that, i.e. going up and higher and higher and higher? That's the case, then you got GU high available as an invalid zone. And then same with Euro as well. Well, Euro just looks like having to supply rejected off at the midline. Engineered that bit there, take it out and then go down. Let's wait and see. Midline supply zone there. I'd like to short it. Need a clean break to the low side, otherwise it's too risky. like that. If that's in, I'll buy full 2 pips. Suit that zone. Is doing this sort of price action the whole time and then flying up, so I need clean volume and structure to the low side to then consider going short, otherwise it's going to keep going higher.
Francis Moulin says it's too soon to say if the ECB should act in June.
All doing. Projecting off of the midline, yep. I've got a bad feeling this is gonna happen again. Yeah, step, 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 step. Had the wick on DJ there. There. It's safe if you should act in June. Okay. That's interesting. I think if you take out this invalid zone, we might be able to go down. That'll give us a 20-25 pip move and then hopefully drop from there. So euros going down and pounds going up. Interesting. What about gold? Oh shit. They already come back. Bollocks. Let's see what happens here then. I'd like it to come down, but seeing this and that is concerning the whole time. If it does it here, that'd be very annoying. Oh, still hovering in a risky area, man. But that volume was great. That was okay, and I don't know. This is not good. As soon as it gives the possible entry, then it's like, oh, wait a second. I'd hold this all the way through the day and then probably swing it from there, in the hopes you can get like a 2, 3, 4 day dip all the way back down to the floor, back down to 70 or something. $463, 37 off. That'd be gangster. Oi, oi, oi. How's gold look? Gold took these highs out, then dropped. I'll have to look at this in New York session, you know.
Japan's Akazawa to attend APEC Trade Chiefs meeting in China, May 21st to 23rd.
Oof, that was just really bad chop. Wow. Wow. Hours. Then it fell. DE. That's beautiful. London Open come took the low. It could go along here. But I can't work out where the hell Asia High and stuff. It's just taking Asia High, that's no good. So it was ultimately this here, but the problem was a build up sweep, perfect, I'm happy with all of that. First leg, second leg, I'd like to go long, nope, supply zone right there, won't do that. Then the supply zone fails here, but you've got all this little channel going on here which price takes out and then moves on. then doesn't give an entry and typical. I'm just building a big channel here now. There. If it's gonna go down, I want it to come up, sweep it, and then at least give me a clean cut structure to then go bearish on it. We've just been sat in this range for the entire time. In a 15 pip range for 6 hours. And then on G, you've been sat in the whole Asia range because of obviously CPI release and stuff. But that's double volume because of the news, which is fine. And then you get all of this and no bloody entry. Absolutely sublime. What's going on with silver? Ah, okay, so if you'd have took it, you'd have had break even right there, and then it would have tagged your break even, and then you would have been like, peace, man, goodbye. Probably would have been about 3R. Not worth it. What's gold doing? The chop. I'm gonna keep that there just to see if it does dip a bit more. If it does, that's fantastic. I'm gonna leave that alone for now then. Actually, I set an alert on here. That way you know if it would have been a complete loss. Yes, Haroon, long time no see.
Welcome to Stratton Oakmont.
What's happening? I say markets have been horrendous, bro. Dima's come a couple times and he's been like, bro, it's dead. And then Sacramony, i.e. Francis, come as well and he's like, eh. Still got no account. Yeah, that's fine. There's no rush, bro, honestly. I've got a feeling because we're nearing June, yeah? When I first traded in 2024... Wait, when did you start trading? What year? Because I started in 2024 April, and that year July and August was disgusting, but 2025 was good because Trump was doing all the tariff stuff, so you had volume in the market in it. So I'm wondering now, is it going to be shit again in July and August? because we're not seeing escalations on war. All stuff's done now anyway, so I'm wondering, is July and August going to be shit? If that's the case, then I might as well just chill out and, you know what I mean? Because normally summer price action is bad. Yeah. I wanted to go short on silver. Yeah, it's politics in it, bro. I can tell you why. I'm keen on shorting gold and silver. Because the dynamics are changing. People are still buying gold in it. They're dumb. If you're buying gold, you literally got no idea what's going on in the market right now. Yeah, I know. I was talking to my brother about it because he's using gold longs. I was like, close the longs, bro. I said, go short. He's like, why? And I told him the reason why, innit? I explained it to Dima. I guess, do you want to know why? Because the narrative is shifting with the Fed and stuff like that. And also, this is more fundamental and geopolitical knowledge as to why it's a bad idea to buy gold. You want me to tell you or not? Because it gets a bit in depth. So I need to ask you a few questions first to figure out how you view gold in it, yeah? Got you. Generally, do you think gold is bullish, or generally do you think gold is bearish in the current market conditions that we have in the current geopolitics and all that stuff? Do you think it's bullish or bearish? Okay, good. That's good mentality. That's good view. So gold, yeah, is a safe haven asset, yeah, in terms of risk and stuff like that whenever you have war and calamity. But a lot of people are wondering, why was gold not flying during the war? Is because that war is more important for oil, because it's an oil exchange issue. Instead of trading gold, it makes sense to trade oil because the volume is going to be in oil, right? So obviously you've got lack of trading momentum in gold because everyone's in oil. Like, everyone was in oil. Even Sahad, everyone was in oil, bro. Like, people who've never traded it before. So there was that. Now also, if oil goes up, yeah, that causes inflation to rise. The reason why is because if the cost of oil goes higher, the cost of fuel goes higher, transporting goods, shipping goods, food, clothes, everything goes higher. So it's inflationary. Now, gold does not do good in high inflation because DXY becomes stronger in high inflation, because the more the CPI is and PPI is, it means the more expensive that currency is. The more expensive the currency is, it makes it harder to buy gold against that currency. And it's like, if you got a weak pound, but you got a strong dollar, you're going to see GU fall off a cliff. But if you got a strong pound and strong dollar, they're just going to go nowhere. It's the same narrative. Now, you've got the issue before where the Fed, they were talking about, yeah, in 2026, we want to do between 2 and 3 rate cuts. Now, to do rate cuts, inflation has to go down enough where it's not a concern. They can start to cut rates to stimulate the economy. How, where, and why? When you have low lending rates from the bank, it's easier for a company to borrow 1, 2, 3, 4, 500 million or 5, 10 billion to put into the businesses, to then use that money to employ staff, you know, do research, development, whatever. So lower inflation means more rate cuts, which means it's like a discount for businesses to borrow from the bank. The businesses are going to wait for their discounts, in it, because if they're borrowing 400-500 million, 10 billion, and they've got to pay 5% back, that's a lot of money. But if they can get the rate cuts all the way down, so they're only paying 2% back, well, they just saved 3% by waiting for the Fed to cut rates to borrow their 500 million, 10 billion, whatever it is. So there's that. Now, hi Mangi, I'm just explaining the gold narrative and fundamentals and stuff behind it to Haroon. Now, if you have high inflation, how do you say? I have a question for you, Haroon. If inflation is really high, how do you control it? How do you stop inflation running out of control? What do you do? Do you know or do you not know? Take a guess. Think about it. Exactly, but what do you have to do with the interest rates? If inflation is low and you're cutting rates to stimulate the economy, what do you do when interest rates are high and it's harming the economy? What do you do? No, because you're lowering rates when inflation is low. You're lowering rates when inflation is low to stimulate the economy and encourage growth. When inflation is high, what do you do to control the height of the inflation and bring it down? Mangi got it on the head. Mangi got it on. I'll explain why. So inflation is the cost of, so inflation is the cost of products, yeah? You know, when prices become so high, we feel it as consumers, that's inflation. If it becomes so high that we can't, that we're struggling to pay for it, what the Fed does and banks normally do is they start hiking rates, to make inflation even higher, to stall the economy. Because the only way to stop inflation going higher and higher and higher is by everyone to stop buying everything, forcing consumers, forcing manufacturers, forcing suppliers, forcing sellers to reduce rates and prices because people are no longer buying from them. Does that make sense? It's like, think of it like this, A really easy example. You know, if everyone's selling gold bars for 20k, but they're worth 15, man's are gonna say, you know what, screw this, I'm not buying gold bars anymore. After 2-3 months, they're gonna start dropping prices because man's gonna be like, yo, they're not shifting, are they? No one's buying the car. We've put the price too high. If no one's buying it, they either sit on the item or they sell the item. But if you're a business, you're gonna sell it. So what you do is you wait for inflation, you just drop the price in it on the car from 20k to 17k. If no one buys it, you drop it 16.5. If no one buys it, drop it 16. When they start buying it again, there's your level. There's business in it. This is business. Economy is business 101. So that's what you need to do when inflation comes out of control, when it goes really, really high. When you see consumers struggling to, like, if the inflation becomes too high, you know eventually they're going to stop buying. Best way to encourage that stall, I call it, my opinion, what I would as stalling the economy to bring inflation back down again. If everyone stops buying everything and manufacturers are supplying things but they're not selling things, so suppliers have stock in their warehouses they bought from the manufacturer but they're not selling it because it's too expensive, they must then at that point reduce prices to shift those items because they're incurring costs having those items sat there not being sold. Food, if you can't sell food, bro, it's gonna go in the bin. If you got a warehouse of like 500 million worth of produce, but you can't sell it because people can't afford the milk prices, meat prices, that's going to go to waste. It's going to go in the bin. You must reduce the prices to get the consumer to buy it. So that's what you should do. Now, when you do rate hikes, what do you think that does to the currency's value? Arun, what do you think rate hike does to a currency's value? Exactly. Now, if you're now just think about, now I'll give you a bit of context as well, yeah. So you got a bit of an insight as to how big of a swing things are occurring right now across the world. First of all, Bank of Australia, RBA, is the first one to do the rate hike so far. They did it a few days ago. They're the first bank in the world to do rate hike. First one. They're getting ahead of the game. Makes the best to exactly, yeah. So if you're trading gold USD, yeah, and then you see rates potentially going higher, it's gonna drop, because then, you know what I mean, gold is more sensitive to inflation than it is gold is more sensitive to interest rates, sorry, than it is to wars and stuff like that. Wars and stuff are great, yeah, don't get me wrong, they're fantastic, they boost gold and stuff, yeah, but it's way more sensitive to rate decisions and interest rates. Gold is way more sensitive to that. There's more traded off at the back of there by banks and hedge funds, which is the bulk sum of the money in the market in gold and silver and these types of assets. Now, from the Fed going from 2 to 3 rate cuts in 2026, now they're shifting the narrative to 1 rate hike in 2027. I've heard rumors they're going to do rate hike in 2026. Do you understand how big of a swing that is? Yes or no? And I'll explain to you how big of a swing it is. Okay, so going from 2 rate cuts to neutral is quite a big move. That's a big move, because you think about it, yeah, when they're doing rate cuts, is to stimulate the economy and boost the economy, yeah. So you're talking as a Fed bank manager, as the Fed, yeah, as the people who own the control the interest rates, yeah, that we want to do 2 cuts to stimulate the economy, boost growth, boost everything, yeah, and then 2 months later, 3 months later, saying actually we're not going to cut rates. Wait a second, you're talking about 2 rate cuts and I'm talking about none. You're talking about stimulating the economy, now you're talking about not stimulating the economy. So that's an example, yeah. 2 to 0 is like, why? Like, that's a bit of a, that's a move. That's like a move, that is, bro. That's like a move, that's a pivot. Now if you got 2 to 3 rate cuts and then you're going to neutral, that's even more the case. Like, yo, you're talking about 2 to 3 cuts, yeah, now you're going 0. That's a big swing, bro. It's like, I'll try and give it in like a context that you could probably relate to or something like that, yeah. It's like your mate saying to a girl, yeah, that, oh, I don't want to get married, I don't want to get married, I'm just about that bachelor lifestyle. Next second he's like, I want to get married and have kids. You'll be like, yo, that's a full 180, bro. That is a full 180. It's almost like that. And then you've got the Fed, yeah, going from 2 to 3 rate cuts in 2026. They've said we're going to do 1 hike in 2027 now. That's like a V shape here, right? That's like a full-on V tar straight in the sky. It's a massive pivot. Massive pivot. And now they're talking about they might do 1 rate hike in 2026. So things are moving very aggressively and very fast in terms of where the banks are putting themselves, the way they're viewing their currency, the way that inflation is coming into the country, the way it's starting to spike and stuff like that. This is where fundamental and geopolitics is really important, with indices especially, yeah, and gold, metal, the gold, silver and oil. Right now these things are running off of pure politics and pure fundamentals and pure macro. Literally, that's where all the banks are right now. JP Morgan, all of them are literally right there at the moment right now, looking at these sorts of things. They're not looking at, oh, there's a break of structure on a supply zone on the 4 hour. They're literally not bothered about that anymore. And I'll tell you why, as an example, yeah. I was saying to Dima a few days ago, I want to buy from this area here, yeah. This key area here. Everyone sees that as a key area, support level, whatever you want to call it, yeah, to go back up to the highs. Now, the reason I didn't buy it is because when I started looking at the Fed, the bank started to change their narrative, and then I've seen inflation. Oh, let me show you the inflation as well. This would be a big eye opener. Doesn't show it on here, does it? Let me go on FX Street. What the fuck? This? I just want the news. Give me the news. Where's the news chart? You know, it's economic outlook, I think it's called, isn't it? Economic calendar. Beautiful. Okay, wicked. Yeah, so if we go to previous week and then we just do dollar, get rid of China, Spain, New Zealand, Switzerland, Ukraine, France, Italy, Australia, Germany. But you know what? No. New Zealand I'll keep, Japan, UK, Euro, Germany, Australia I'll keep, and Canada, because this actually be really good. Perfect. Beautiful. Okay. Now let me switch the screen to this so you can see this, because this is going to be kind of important. Window capture, Brave. Okay. So this is CPI, yeah? Can you see this? The CPI is the consumer index inflation, yeah? Now the Fed's goal and target was 2%. Euro's target was 2%. UK's target was 2%. For some reason, 2% CPI is kind of like the Western target. They never hit the target. It's almost impossible. Europe does, don't know why. But UK and USA never does. But it's about getting as close as you can to that level. The closer you get, the more you can cut. The more you cut, the more banks, more businesses borrow money. Hopefully that gives more jobs. Hopefully they spend more money growing the economy, blah, blah, blah. So the goal is to have it where you got low inflation and you got high growth. Employment's really good. Growth is really good. CPI is really low. Employment's really like high. Like that's ideal, yeah. So this is year on year. So there were previous was 3.3, yeah. 3.3. Forecast is 3.7. It's come out 3.8. So from previously, it's gone up by 0.5% more year on year inflation, yeah. That's not really good. Month on month, stayed at 0.6, which is fine. This is food index. This is food index year on year. Previous was 2.6, now it's 2.8, more of an increase. So it missed the forecast, so it surprised the forecast by going higher than the forecast, yeah. And the context of where was things 1 year ago versus now, we're seeing big rises in inflation, yeah. CPI is not that bad, but remember the goal is 2%. We're at 3.8. We're nearly double where the goal is. That's not good. It's not bad, but it's getting worse, if you see what I'm trying to say. Now, that's not ideal. And then here, yeah, we have PPI. This is where it was disgusting. This was horrendous, yeah. PPI is the cost of inflation for manufacturers. Now, the month on month was 0.7 last month. This month it was 1.4. It doubled what the previous one was. The forecast was 0.5. It's almost tripled the forecast. That's bad. That is bad. Month on month. Yeah. And they even revised it from last month. So that means it wasn't even 0.7 previously, it's 0.5, so it's actually gone higher. Oh god, that's really bad. And then you've got the year on year producer price index. This is year on year inflation, yeah. It went from 4 to 4.3 revised. That's bad. So 4 points went from 4 and it come out to 6. It's 2 entire percent more than previously. The forecast was 4.9. You're right, it did 1.1% over the forecast. This is really bad. Like this is concerning, bro. Like this is like really concerning. That's why the narrative shifted. And I'm going to show you another thing. Have you ever heard of the CME Fed Watch tool? the CME Fed Watch tool. This is literally, yeah, this is by the Fed on their projections as where they're looking to cut rates. Here we go. So here's where we are right now.
ECB will have to react at some point.
We're right here right now, yeah. We're between 3.5 and 3.75 right now. Before, this is the likelihood how much we're gonna cut. So in June, we're gonna stay the same. July, we're gonna stay the same. September, we got 70% chance staying the same. October, November, December, yeah. Now next year, actually, is staying the same, is shifting to 40%, yeah, meaning that this is more likely. Shut up, man. This is more like you're gonna get a rate cut, 40% chance, yeah, 39. But the point is, as we stay on this level, we're dipping, and we're growing. So we're shifting. Now, I don't know if you can see the previous projections. You look, they're not about doing one hike. There's one where the historical. Did this? Wait, I'm trying to find like the graph in it so I can show you, but look, dot plot, no. Won't find the historic one because there's one where it tells you previously in it, yeah. So this is probabilities. Point being, probabilities not looking good. We were supposed to get rate cuts. This was supposed to be lit up here. This was supposed to be lit up. This was supposed to be lit up. This was supposed to be lit up. Yeah, but they're not. Instead, this is lit up, meaning that we shifted from cuts to holds this year. Next year, they're talking about hikes. Honestly, I think if in May and June we get even more inflation, even more problems coming in the economy, they might shift this into this year and say, you know what, we might do a cut by November, December. We might have to do rate hikes, sorry. I'm telling you, the dollar is gonna fucking fly. So this is the Fed's projection. Now, I love this because if you keep an eye on this, yeah, and you keep an eye on what the Fed does, you're going to be ahead of most traders, bro. I'm telling you. Like, you're going to be ahead of most traders because you understand the market more than most people do. Like, if you're selling a dollar, yeah, you're going to get cooked. Why are you selling the dollar when the dollar's flying up in the next 1, 2, 3, 4 months, whatever? At least you know in advance that, okay, I can probably keep trading bearish dollar for now, but in my mind, I should expect to see a stronger dollar in the next few weeks starting to come into play. If I start taking losses, it's fine because I'm shorting it because I want to ride that move. But if I short and I take losses, it's fine because I know that ultimately the DXY is going to go higher because of the interest, the rate hikes, the economy, all that shit. Now, there's a lot of information I gave you just there, yeah? Quite a lot of information indeed. Now, I'm going to try and bring it back to gold. This level, a lot of people are looking at. Banks, hedge funds, everyone, yeah? Are you still following, by the way, or not? Because there's a lot of information, but are you still kind of following? Yeah. Okay, yeah. So you kind of get it, yeah? Like, I know it's a lot, but you kind of get what I'm trying to, like, explain so far, yeah? Wrap it up soon, lol. Yeah, I'm wrapping it up. So, the dollar is also a safe haven currency in terms of war. We've seen that with the war, yeah? When the war started, dollar flew up. But before that, dollar was falling because things weren't looking good in the economy, you know, all that shit, yeah? It was looking, you know, the Fed was going to cut rates 3 times. That's going to weaken the economy. The growth wasn't looking that good. It's weakened the economy. The dollar was weak. War started. Everyone started buying dollar because it's the safest currency, one of the safest currencies in a wartime. So dollar becomes strong. The war is surrounding oil. Gold is left aside. Oil is causing inflation. Inflation is rising. We've just seen the stats. PPI is going absolutely chaotic. CPI is creeping really badly. Interest rates hikes have shifted from the Fed. Bearish. Puts 2 hikes. The swing is quite an aggressive swing, like in terms of the Fed, very aggressive, yeah. RBA's already done rate hikes. They've already started the rate hiking cycle as the first Western country in the world, yeah, to do that at the moment. All these things put together is the reason why I literally think this zone right here is going to get cooked. This zone's going to get absolutely cooked. That's going to get mangled, bro, that zone right there. Now I'm going to show you one more thing because this is important, yeah? But I'm going to try and do this really quick. Government yields. These are the yields from the government, yeah? Basically, these are percents. So how much you have to pay on borrowing money from the government. If you're going to have rate cuts happening, yeah? This is going to drop all the way down, meaning when you buy the dollar, you're only paying 3% on the dollar. You're going to get more return on it, yeah, if you get what I'm trying to say. If CPI is low, inflation is low, and the economy is strong, and then you buy the dollar, you're going to get more benefit on that investing in the economy with that. Now, so basically how it works is you cannot cut rates if yields are high, because if you cut rates, who's going to buy the currency when you're going to get no return, because you're going to have to be paying 4.1% on the currency? That's crazy, bro. Why are you going to buy that for? You're going to pay 4.1%. What are you going to get back? Nothing. You know what I'm trying to say? And if you do 10-year yields, which is more longer lasting, and go on the daily chart, yeah, yields are flying through the roof. They're literally flying through the roof because of the inflation data. Meaning, if yields are not in line with where the Fed wants them to be, they cannot cut. You see what I'm trying to say? They cannot cut. It's impossible. You can't cut, because you cut, yield is going higher. Meaning, the cost of holding the currency is 4.7%. Where are you going to make your money on holding the currency? You're not going to make your money. Whereas if this was dipped all the way down, yeah, to, let's say, I think they did a cut in 2024, they did a cut, yeah, it was 3.6%. And now you're up 1.2% more than that. That's a lot. Anyway, simplest way to look at it. How's the Fed going to cut rates? Look at the yields, 10-year yields. The higher it is, they're not going to cut rates. The higher it is, the more likely to hike. That's the simple way of it. So everything here is pointing to dollar's going to go strong, gold is going in the toilet. That's it. That's basically it. Now, in terms of how deep is it going to go, I'm not sure, bro. I think gold might drop down to like, I don't know, maybe like, I don't know if it'll drop all the way down to this level. Because that would be like a 40% drop. But I think gold is going to do a bigger move to the downside for sure. You probably hit 38.80. I think you should hit 38.80. Because if we're going to be in rate hiking cycles, it's not going to be a 1-2 month thing. We're going to be in that cycle for like 6 months, 9 months, maybe a year, maybe a year and a half. This is going to be a possibly long-term hike/neutral cycle. Now, because of that, gold is going to struggle for longs. It's going to struggle for longs. It really is. Yeah, and I think it's going to happen in the next... I think we're going to get to that level in the next 2-3 months. I think we're going to hit that 3,880 level in the next 2, maybe 3 months. Depending how things progress with the Fed. It's mainly depending on the Fed. The war doesn't really have anything to do with this, because it's not a war that gold is a part of. That makes sense. You're looking more at oil. The longer oil stays higher, the faster inflation creeps up. The faster the war ends, the inflation creeps down. So it depends on how the Fed is going to then challenge that. If Trump needs to end the war, bro, economically, he needs to end the war. Iran's not bothered. They've lived under sanctions their whole lives, yeah? Why are they going to be bothered about anything else? My Sujima Haman, subscribe to your channel. If you're looking at this stream right now, thank you. drop a comment, feel free. Anyway, so ultimately, yeah, it's going based on whatever the government's gonna do, but they need to cut the rates because, as I said, inflation is going through the roof. Yeah, so they need to really kind of start reducing or start making negotiations to help bring the price of oil down. Because the minute they do a ceasefire and it's all done, oil should drop to about 70. Yeah, where are we now on oil? Crude is at 111, Brent is at 106. So we're still almost double where we were pre-war, and we're seeing the inflation go crazy. If the war ends and it drops to 70, they might be able to wait it out for 3-4 months, see how the economy is doing before they do any hikes. Just have to wait and see. So this is what I'm thinking. If the war goes on longer, it's really bad for gold. It's bad for the whole world because everyone's gonna get like crazy expenses and stuff. But if the war ends soon and oil drops, then Trump can say, drill baby drill, pump out as much oil as we can, drop the price as fast as we can, bring all the prices down rapid. That's what I think is gonna happen. This is getting very political, but I love this shit. So yeah, this is why like geopolitics is important, and understanding like fiscal policies and where banks are and what they're looking to do, what the Fed looks to do and stuff like that. Like there's a massive importance behind it. And gold is literally showing that right here. Honestly, I reckon like this zone should fail 100%. Like should fail. You might get a bit of a bounce here, but this zone should fail for sure. So I wanted to go short, but once again, there was no clean entries anywhere. Absolutely hilarious. So anyway, Haroon, how was all of that? Because there was a lot of information there. Yeah, good stuff. Yeah, this is what all of the pros are looking at. You know, all the JP Morgan and all these boys. This is what they look at, innit? Thank you for the subscribe. Thank you. Appreciate it.
Welcome to Stratton Oakmont.
That's what I'm talking about! That's why he's the MVP! That's why he's the GOAT! The GOAT! Wow! Beautiful! William, knife man.
Oh man. So yeah. You know, like when you start learning these things, Haroon, you become a much better trader because it depends on the asset you trade. You're heavy on gold in it, so this is important for you to understand. Because then you might be wondering, like, oh, why isn't gold flying during the war, all this stuff? Have you wondered? Like, have you been like, oh, why isn't gold flying up and stuff? Because a lot of people have, from what I've been seeing on social media. It's because they don't know anything. But I don't know if you're one of those people who also had the same, like, oh, why isn't gold flying up sort of thing. I need to find a zone on here, yeah, that Euro might want to bounce from, but I can't seem to bloody find anything. To be honest, this should fail. I'm not seeing a 40 pip move on this. Probably get rid of that. That can stay there, I suppose. I want price to drop on UJ, but I'm not sure if it's gonna happen today. Okay, perfect. Yeah, so if I was to have shorted silver, I would have took a L there, which is unfortunate. I want to get short on silver and gold in it, back down to like certain levels. Like on silver, I want to get down to, I think, because silver is gonna drop bigger than gold anyway. Yeah, because it always does because of more volume. So I'm expecting silver, because we had 61 there, I'm expecting silver to drop down to about this level here, around 50-ish. And you got a lovely support level there as well. Right there. So I want silver to drop here. Over the low is going to be massive stop loss. Just cover it from there to there. That zone there. Buying at about 52. What's the low? The low is 48. Cover it to about 47. And then ride it back to the highs again. And that'd be 13 or 14 or. But what I'm also thinking of doing is one of my mates here, who's a trader, has been trading for like 8-9 years, really successful trader. He's literally buying silver physically. So as silver drops down here, depending if I make payouts and stuff like that, if I have enough money, I'm gonna stop buying physical silver. Like 1 kg of silver, 2 kgs, or I don't know, like as much as silver as I can get, because that's gonna go through the roof then, that is. And then as I said, gold, I'm expecting gold to dip down to, I think we're gonna see sub 400, it's 4,000. Yeah, I want to see it go below 4k, because then if you go from 4k back up, you're gonna get 1,600 pips. That's more than that. Wait, 10, 100, 10, 100,000. That's 16,000 pips. Yeah, you'll cut 16,000 pips on that move all the way back up to the top. Anyway, I'm gonna stop talking about that now because you went on for a while over it. So GJ is crap. We've been stuck in a 26 pip range for about 2.5 hours. It's pretty much since here, isn't it? So yeah, 2 hours and 30 minutes you've been stuck in a range. Can't do nothing with that. Nothing at all. Trust me, horrendous price action, man. Very, very horrendous price action. Anyway, Mwangi, how are you? How's your trading going, man? Do you catch anything or not? Maybe could go long here, I don't know. I don't like taking these, I don't like taking these sorts of like shitter quality trades, man. I want like the top stuff, not the shitty stuff. Oh bollocks. see that. So yeah, there's no move on, unfortunately, for gbpjpy. EURUSD, have a look. Blended, that's good. I've been really enjoying all this fundamental stuff, man, because I've known about it for ages, but it's never really been useful. Now it's very useful. It's just been really disgusting price action. I wanted a clean setup, yeah, where you sweep this level and then you drop here. Instead it tagged a freaking demand zone, yeah, because technically it did break these internal mini structures. Couldn't catch anything there, couldn't catch anything clean here because it had kept tagging freaking zones and stuff like that. I think it was the same on GU. Yeah, this would have failed anyway. It took a loss there, and then you had a build up sweep there, beautiful. No clean entry. Yeah, I was looking for sells on silver and gold, but on M1, but can't seem to catch anything clean yet. Wait a second, that looks quite good actually. That looks nice. If you can get like a clean run, then I'll go short from. Then I'll go short from there. There. Okay, it skipped or jumped. You know, like macroeconomics and stuff, they're really good, man. Once you understand it, it's more advanced tier stuff in it, but it's really good once you get your head around macro and stuff. Okay, we got no more news till Eurozone CPI year on year, and then we got FMC meeting minutes. I don't think there's going to be much volume from there because all it is the statement of what was said in the previous FOMC meeting, alongside any additional things. I don't think much would have happened after that grab. Oh, you mean on the M1? Like this grab here on the M1? I mean, it looks good because it took out like that level there too, and you had nice volume coming in. I like that. It just depends if we're gonna follow through in it. If we follow through on it, I'm willing to consider going short on that. So yeah, it's not really been ideal. Took a long here, break even, no partials. Took a short here, booked. Missed short there. I'm thinking about adding a few different pairs in as well. Possibly USD CAD for New York session. Thinking about adding DAX for UK session. And then thinking about doing US 30 for New York session as well. Thinking about it. The reason I like these usual 4 pairs is they're all interlinked in it, so then it helps you pick bias even more. Now it's much cleaner. But Might have to shift. Go for it. Yeah, I'm thinking about it, yeah. Oh, you sent the edge finder record thingy in as well. The Euro GBP is really strong. Dollar's strong. GJ's weak. GC's weak. Bitcoin's weak. CAD's weak. GU's -5. Yeah, I'm not looking good, man. Oh, it's 40% off.
Gentlemen, just want to say that
they got 40% off. I don't know if it's yeah, the Alpha Capital Group's got 40% off all accounts, which is not bad, you know, because I got their 200k account with the 40% off. But I'm not getting any more accounts because I'm kind of done with all these accounts. I'm gonna build my own and then get over it, get on with it even. Wait for AUD. What do you mean AUD? So EU, GU, and AU are all very similar. Whereas USD CAD's quite different. Because I used to trade EU, GU, AU in my first like 3-4 months of trading, and then AUD had the least pip volume out of all of them. But generally it's very similar. Now you could go short here, but I'm wondering, is price gonna do this? I'm really wondering what to do here, man. What's silver doing? Silver hasn't dropped down yet. Yeah, that's what I was saying, because then that 67 level is here. And you've got a little like trend line going on there. 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, 6 touch. That's, I'm just wondering, that's like a mini little trend line channel going on right there. I'm just wondering, is price gonna either short through there, or is it gonna drop and then go higher? Gold loves the Asia midline, but this is diabolical. I would like to go short, in all honesty. Would have missed the entry anyway. Look, you could probably do like 0.5. Instead of 18, do like 25 or 26. Let's see what happens if it holds or not. I don't think it will. I got a feeling it's gonna keep going higher. Silver's going high, which is a red flag. That doesn't help. Yeah, look, it's going up, and silver is probably still going up as well. Yeah, I think the good thing about gold and silver is you can use them to correlate with each other, how I use EU and GU. So if one of them was dropping, I'd wait for the other to follow and then entering on or pull back on any of those two or something like that. Oh yeah, it will, 100%. But I feel like silver's the leader. Because it has more volume and stuff like that. I think silver tells you the move before gold does the move. Does that make sense? Because all the volume's in silver, so you see it happen on silver first. I feel. Maybe I'm wrong, but that's where I feel. I wanted it to drop here, yeah, but when you look at M5, I mean, just look at probably M2 is better, yeah. Just look at this. Consolidation, bullish run. Consolidation, bullish run. Consolidation, bullish run. Consolidation, bullish run. I was here, I was trying to short it, like, come on, please, because that's a lovely channel, bro. Lovely channel. I was like, come on, give me a short, give me a short. And I was suspicious that it could just do another consolidation and then a bullish run, but it's not happening. Still going, look at that. And gold is as well. See, look, I told you, bro. I told you. You've got all of this here and you've got that there, yeah, which makes me think that obviously it could go bearish, but then you've got silver, which is channel pullback. No, not really. That's not even a channel. It's just creating higher highs and higher lows gradually. It's fine. Now look in New York. New York will do the move how it did yesterday. That liquidation event was fucking beautiful, man. Literally. Price come took out all these highs. First leg, second leg, consolidation, then just dropped. It was beautiful, man. It's literally how many pips? Woo! 725. Mad. Beautiful. But when you're looking at the 4 hour, yeah, probably better on the 1 hour, maybe. No, not really. It's just tagged into this demand zone right here. I think it's gonna just do a bit of a pullback. Maybe come take Asia high and then drop down. I don't see it doing much of a big move up, in all honesty. And then this here, I might come up and take this high here or tag this supply and then drop down. Because this key area held really good, bro. Look at that. It held so good. I wish I went short, you know. I don't know if the narrative was the same a few back then. No, I think it might have been. I think it might have been then. If I'd have got short there, it'd have been good. Oh well, it's fine. I'll just wait now. Nothing more I can do.
Finally, it's time to get Eurozone CPI. Year-on-year final forecast 3% on the prior 3%. Month-on-month forecast 1% on the prior 1.3%. Core CPI year-on-year final forecast 2.2% on the prior 2.2%.
Well, I'm gonna stick around till the news comes out for Eurozone CPI, and then I'm gonna probably go because nothing's happening, man. Is there anything you don't want me to look at or not? You could look at US 30 and then DAX. So DAX had a lovely move in London Open. Took the low, flew off, and then just contracted straight back down. Ah, look at that. That's clean. Yeah, no, there would have been no. Damn it, man. There's no pullbacks. It's just creating structure and running away with that, doing a pullback on DAX. It looked good that did on DAX. What else is there? What else can we look at? What else can we look at? Look at USD card. It's not that good in London normally. Hey, this is not looking bad. I would have got tagged at break even there. Yeah, you would have got tagged cause. Yeah, I'm gonna stick around for the Eurozone CPI and then I'm gonna go as well. I'm just curious to see what the news come out as. I'll look at New York session, see if there's anything there for New York. What's the spread on this? 0.3, that's not bad. 2.5 on there. Would have tagged and had a break even. But then would have tagged you straight back there, innit? Yeah, nothing you could do on that. Nothing to do on USD card, unfortunately. Look at US 30. I don't work, does it? Yeah. Nothing, unfortunately, that I can see today. Another day of choppy price action and choppy moves, but it is what it is. I literally won't do nothing about it without changing the way I trade, and I'm not really willing to do that.
Eurozone CPI year-on-year final 3%, 3% as expected. Month-on-month 1%, 1% as expected. Core CPI year-on-year final 2.2%, 2.2% as expected.
Well, hello everybody, this is Donald J. Trump. You're behind the markets. If you're a real day trader, go real time at financialjuice.com/purchase and save 67% on a subscription. Isn't that one big, huge, brilliant deal? Come on, people.
Right then, guys, I think I'm done, man. I'm gonna have to wait for New York session. Hopefully we get something clean in New York, innit, because London was a bit shitty, in all honesty. And then I'm gonna start about testing that other strategy as well, or the other entry model, and see if that looks any good. I'm thinking about trading it actually, but doing reduced level of risk on that. Instead of doing 0.25% on this master account, do like 0.1, and then all the other accounts will be reduced risk as well. But then it messes the track record up and stuff as well. I was trying to build, but I suppose it wasn't that great anyway, because I made 7.7%, but there's hardly any trades. So yeah. I look at it now. Oh. So yeah, August was profitable, September was profitable, October was break even, November was profitable, December was a 1% loss, January was a bit of a loss, April was a bit of a loss. So I had 1, 2, 3 profitable months, 1 break even month, 1 losing month, 1 break even month, 1 losing month. But the account's still up. I'll show that here so you can see as well. Anyone is still here. So 2025, I made 5.75% in August, 2.7% in September. I think that's 1 loss. I had 1 probably partial there, and then probably 1, 2 losses there. And then this, I think, is 0.18 doesn't work out to 0.25% risk. So I'm thinking this is probably gonna be. Oh, that's when I got slipped by the news of the Bank of Japan, and then we had 1 or 2 losses, huh? Yeah, one of the trades was actually profitable, but then obviously we did the stop loss too tight on it, so yeah. We were up 9%, then we dipped down to 7.3, then we were up 9.7, we just dipping back down to 7.7 again. And then the personal account, I don't think there's been much on there. That's just been mainly trading silver, getting my money, and it's doing withdrawals and deposits. I made 28% there. Could have been more. That's me done. Hey, like if you haven't. If you have, thank you. Links in the chat. Anyone watching this back, drop a comment, I'll answer it. Peace out. Have a good one. Bye. If you're here, Harune, peace out.